The stock market just did something that almost nobody noticed. Not on the news, not on social media, and definitely not what retail investors are talking about. But here's the scary part. This exact signal has historically predicted major market moves weeks before they happen. And right now, it just flipped. Context. What's happening globally? Let me take you behind the scenes, because what you're seeing on the surface is not the real story. Stock indexes look stable. Some tech stocks are still rising. Everyone feels like maybe the worst is over. But zoom out. The global economy is under pressure. Interest rates are still high. Central banks are playing a dangerous game, and governments around the world are quietly shifting policies. In the US, the Federal Reserve is stuck. If they cut rates too early, inflation comes back. If they keep rates high, the economy slows down. It's a trap. At the same time, global tensions are rising. Trade wars, energy disruptions, supply chain cracks that never fully healed. And here's what nobody is telling you. Big money is already reacting. Not next month, not next quarter. Right now. Building tension. Because while retail investors are still debating, should I buy? Is this a dip? Is this a bull market? Institutional investors are doing something very different. They're rotating, quietly, strategically, and fast. The hidden financial angle. Here's where things get interesting. There's a pattern that shows up before almost every major market shift. It's not hype, it's not headlines, it's money flow, where capital is moving, and more importantly, where it's leaving. Right now, something unusual is happening. Money is moving out of the high-flying growth stocks and into defensive sectors. But wait, it gets deeper. This isn't just a simple rotation, it's a signal. Because historically, when this happens, it means one thing. Smart money is preparing for a shift. The real story, curiosity gap. But the real story is even bigger, because this shift is not just about stocks, it's about liquidity. Liquidity is the oxygen of the market. When there's more money flowing into the system, stocks go up. When liquidity dries up, everything changes. And right now, liquidity is tightening again. Why this matters? Here's what nobody is telling you. The market doesn't crash when people are scared. It crashes when people are comfortable. And right now, most investors are getting comfortable again. That's dangerous. Because under the surface, signals are flashing. The signal that just flipped. Let me break it down simply. There's a relationship between bonds, stocks, and interest rates. When bonds start outperforming stocks, it often means investors are moving to safety. And recently, that relationship just flipped. Again. This has happened before. Before major corrections, before slow bear markets, and before sudden volatility spikes. But here's the twist. This time, it's happening in a completely different global environment. Building suspense again. Because now you have to ask, if smart money is moving, where are they going? And more importantly, what should you do? The opportunity. This is where most people get it wrong. They panic, they sell everything, or worse, they ignore the signal completely. But smart investors do something else. They adapt. Right now, there are 3 areas quietly gaining attention. 1. Defensive stocks. Companies that people need, not just want. Think utilities, healthcare, essential goods. These companies don't explode in bull markets, but they survive downturns. And sometimes, they outperform when everything else falls. 2. Energy and commodities. Here's what nobody is talking about. Global instability often drives commodity prices. Oil, natural gas, metals. When supply chains break, prices move. And smart money is already positioning here. 3. Cash and short-term instruments. This might sound boring, but it's powerful. Holding cash during uncertainty gives you options. It gives you flexibility. And when opportunities appear, you're ready.
But wait. But the real opportunity isn't just where money is going, it's when to act. Because timing matters more than ever. Warning/risk. Now let's be clear. This is not a guaranteed crash signal. Markets don't move in straight lines. There will be rallies, fake recoveries, moments that look like a new bull run. That's how markets trap people. They create confidence before pulling the rug. And if you chase blindly, you get caught. The bigger picture. Think of the market like a game of chess. Retail investors are reacting to moves. Smart money is planning 5 steps ahead. Right now, they're not chasing hype. They're protecting capital and positioning for what comes next. Final build-up. So here's the real question. What happens if this signal is right? What happens if the market really has flipped direction? Because if it has, the next few months could look very different. More volatility, more uncertainty, and bigger opportunities for those who are ready. Conclusion. Powerful closing. Here's the bottom line. The market just gave you a signal. Not a loud one, not a trending one, but a powerful one. And signals like this don't come often. You can ignore it, you can hope everything keeps going up, or you can prepare. Because the people who win in the market aren't the ones who react last. They're the ones who move early. CTA, call to action. If you want to stay ahead of global money moves and understand what smart money is doing before everyone else, subscribe to the channel. Because the next shift, it's already starting. And you don't want to miss it. Rock it.